Good evening, everyone. Welcome to the channel. Today I am going to talk about Transport Int'L interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Transport International Holdings Limited offers a diverse range of services and businesses, including franchised public bus transportation services in Hong Kong, non-franchised public transportation services, cross-boundary shuttle bus services between Lok Ma Chau and Huengang, chartered hire services for various groups such as business commuters, tourists, shoppers, students, residential estates, and schools car rental services, taxi hire services. The company also engages in property development through its property holdings and development segment. The significant increase in Transport International Holdings Limited stock price over the past year can be attributed to several positive factors. The company's strong half-year earnings, with an EPS of HK $0.37, a notable increase from HK $0.24 in 2024, contributed to its rising stock value. Additionally, the declaration of an interim dividend of HK $0.30 per share and insider purchases of the company's stock further boosted investor confidence. The technical buy signal received by the stock on July 17, 2025, also played a role in its price appreciation. Analysts' positive market outlook for Transport International Holdings, citing resilient demand for franchised public transport in Hong Kong, urbanization, and infrastructure expansion, has contributed to the company's rising stock value. Overall, these factors have combined to drive up Transport International Holdings Limited's stock price by over 50% from its 52-week low. The primary drivers of revenue growth or decline can be identified from the financial summary provided. On the growth side, key contributors include a fare hike leading to increased fare revenue, business expansion in Sun Bus Holdings Limited and its subsidiaries, higher bus patronage due to northbound spending by Hong Kong residents over weekends and holidays, as well as increases in franchised bus operations, media sales revenue, gross rentals from investment properties, and non-franchised transport services. On the decline side, the main factors include a decrease in property holdings and development income, lower license fee income, reduced insurance expenses, and decreased provision for toll exemption fund. These changes indicate shifts in various business segments that have impacted overall revenue performance. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash flow of $740.7 million, the company is able to produce significant revenue without relying on external financing sources. This positive trend is further supported by a net increase in cash and cash equivalents of $365.6 million, demonstrating the company's financial stability and ability to manage its resources effectively. The company's financial performance indicates a significant reduction in its debt levels and interest expenses. Specifically, net borrowing decreased by HK $112 million, bank loans decreased by HK $20.9 million, and finance costs, interest expenses, decreased by HK $27 million. Additionally, the interest element of lease rentals paid also saw a substantial decrease. These changes suggest that the company has successfully managed its debt levels and reduced its financial obligations, resulting in lower interest expenses. The company's financial performance was largely positive across various segments and regions. The franchised public bus operations, specifically the KMB segment, saw a significant increase in profit after taxation of $154.8 million, driven by a 4% rise in fare revenue to HK $3,577.9 million. Non-franchised transport operations also performed well, with a substantial increase in profit after taxation from HK $6.2 million to HK $11.6 million. The Sun Bus Holdings Limited and its subsidiaries, SBH Group, experienced a 20.7% surge in revenue. In Hong Kong's franchised bus operations, revenue increased by $129.5 million, accompanied by a notable rise in profit after taxation of $158.6 million. These positive trends indicate a strong financial performance across the company's various segments and regions. Management's outlook on the company is optimistic about its current position, having successfully leased out its entire lettable area. However, management acknowledges that fuel prices are expected to remain volatile and will closely monitor this factor. Additionally, they anticipate rising interest rates and have planned strategies to mitigate potential risks, including the use of derivative instruments when necessary. There were no notable acquisitions or divestitures in this period, as indicated by the financial summary on page 10 of the report. This suggests a stable and unchanged business structure, with no significant changes in assets or ownership. The company has a history of paying dividends, with a total payout of $247.2 million for the previous year. Specifically, in the current period, it is confirmed that dividends were indeed paid out, totaling $107.2 million. This demonstrates the company's commitment to returning value to its shareholders through dividend payments. That concludes the financial summary for Transport Int'L. Feel free to comment below, and I will be happy to answer them when possible.